Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are set for a weak start after previous session sell-off. GIFT Nifty at this point of time has indicated a weaker start coming in for Indian benchmark index. Let's talk about US equities. Ended lower Wednesday with S&P 500 lodging its worst day since April. Let's talk about the regional counterparts. Declined on Thursday following an overnight sell-off on Wall Street. This was after the Fitch rating cuts the US government's credit rating. Talk about FIIs. They've been offloading shares this time around for fifth consecutive session to a worth of around 1,877 odd crore. Let's talk about DII. The sell-off continues there itself. Sold shares to an extent of around 2 odd crore on August 2nd. The amount is minuscule out there, but back home, a bit of rejoice coming in. Morgan Stanley has upgraded India to overweight rating. In terms of stock-specific activity, Bharti Airtel, Dabur India, Torrent Pharma, HUL and Infosys are among some of the stocks that have seen highest delivery interest. Earnings that we like to watch out for: Titan Company, Ambuja Cements, of course. A bunch of names out there that are expected to play out in today's session. And of course, Ambuja and Titan both have reported in their numbers, and we're going to be talking about Ambuja Cements and Titan in just a bit. But let's talk about the F&O cues. FII in F&O. Well, FIIs have been the net seller to an extent of 860 odd crore in index futures. They've bought in 13,048 crore in index option. They've been net sellers aggregating to around roughly 2,000 odd crore in stock futures, and also have been the net sellers aggregating to around 233 crore in Bank Nifty futures. Overall, if you just talk about the Bank Nifty options, that's where the buying interest is. FII have been net buyers aggregating to a worth of around 3,428 crore. PCR 0.75 versus 0.92 of the previous session, indicating that it's a bit of underbought zone right now that the markets are currently looking at. Well, F&O ban on NSE, the list there is Gujarat Narmada along with GNFC, which is there on the list right now. But let's address the markets open there for you. A bit of cautious start, like we anticipated. Losses to an extent of 0.3% out there. Below that 19,500 mark. And let's talk about the Bank Nifty index to see where the weakness essentially is coming in from. We're looking at losses to an extent of 0.3% out there. Let's also talk about the small cap and the mid cap index, where we're seeing losses to an extent of 0.2%. For mid cap index, it is the same. For small cap index, which seems to be a little bit of outperformer, is also it has surrendered to selling pressure. 0.1% of losses coming in for that one overall. And let's talk about the sectoral indices that we have on the list. We have IT basket overall down and out with losses of around 0.5% out there. FMCG2 has surrendered to selling pressure with losses of 0.5%. Pharma index is doing well, a bit of outlier in terms of the subdued market trend, gains with around more than 0.25% coming in for the pharma index. And in terms of the other sectoral indices that we have, something like a private banking, PSU banks, auto, along with realty index, just to see how the trend is stacking up for that one. That's the one that we need to watch out for. Private banking index, no different trend. We're looking losses to an extent of 0.4%. For PSU bank, well, a little less losses. Nevertheless, the selling pressure continues even for that one. If you talk about the other sectoral indices, something like an auto basket too has surrendered into the selling pressure. Overall, we're looking at a subdued market trend coming in, and it's for the second consecutive session that the weakness has overtaken the market. Well, probably the downgrade which has come in on the US credit rating was just one of the excuses that most of the investors have used to probably take their profits off their table. Market breadth completely weak out there. Declines 42, advance 8. Let's talk about the top gainers and top losers that we have from the list, just to see how the trend is stacking up. The companies which have done well in today's session on Nifty 50. The trend, Sun Pharma is one with some amount of gains coming in on that one. DV's Lab and DRL are some of the other top gainers that we have on the list. HDFC Bank is also doing well in trade today. Let's also talk about the top losers that we have overall. Ultratech Cement, UPL and Bharti Airtel. These are some of the top losers that we have. Of course, Bajaj Finserv and Maruti Suzuki are some of the other top losers. So essentially, it's the cement manufacturer along with the auto companies which have essentially taken in the hit on the markets. And if you talk about what we have in terms of the current update, Ambuja Cement, that's the one which should be on your list. Of course, there were a lot of rumors doing the rounds around Ambuja taking over Sanghi Industries, and the announcement has finally come through. It's going to be an acquisition with an enterprise value of around 5,000 odd crore, which will be funded through internal accruals. Sanghi Industry has a clinker capacity of 6.6 million ton. And of course, the entire, with this acquisition, Ambuja will increase overall capacity to 73.6. Right now, the stock isn't doing too well. Losses to an extent of 0.2% out there. Ultratech Cement also isn't doing well. But let's look at Sanghi Industries. That's where probably the traction will come in for. It's something which is a more of consolidation play, taking in for the entire markets. And that's probably one bit that needs a bit of address. So the gains coming in for Sanghi to an extent of 2.5% out there, near about there. But let's get in Chandan Taparia, Senior Vice President, Head Derivatives and Technical Research at Motilal Oswal. Good morning, Chandan, and apologies for the delay out there. I'd like to understand your view for Nifty and Bank Nifty, and also your assessment coming in for Ambuja Cement, ACC and Ultratech for that matter.
Yeah, good morning. Thanks for having me. So we have seen weakness in the broader market. The Nifty, which was holding well to its 20-day exponential moving average, has broken the same. So because of that, pressure could be there in indices. As of now, we believe that till Nifty holds below 19,560, overall weak structure could be there towards 19,420, 19,333 kind of level. Talking about your reply on Ambuja Cement, we have seen some recovery in cement counter, but again, the follow-up was missing, but comparatively the strength is visible, declines are being bought. So we have support near to 452, and because of that support, Ambuja can head towards 480, 482 levels.
Sure. Chandan, stay on with us. Just let us know what are the stocks that you find attractive given the earnings space that we have. HPCL, Gujarat Gas and Titan are among the one that have already reported in the numbers. But of course, I'd want your view on Delta Corp and Nazara as well. But let's address the stocks and news. HPCL, which is given in better than estimates earning. Net profitability is up by 92%. Revenue is up by 3.5%. EBITDA, we've seen the outperformance coming in, and the margin has come in at 8.3% versus 4.1%. Like most of the analyst community has already suggested, for OMCs, this first quarter is better than what the entire FY23 has been. Overall, a good show coming in for HPCL, much in line on anticipated lines. The stock isn't doing well, down and out with losses of around 1.5% thereabouts. Let's talk about the other one, Titan. More or less in line with what the street was estimating. If you look at the numbers out there, we are looking at gains coming in. Actually, it's below estimates number. Bottom line performance is flat. Revenue is higher by 25%, and the operational performance has taken a hit by more than 5.5%, with the number coming in at 1,103 odd crore vis-a-vis an expectation of 1,280 odd crore. Jewelry EBITDA margins essentially have come in at 11%, and watches and wearables at 11.5%. Overall, what's not done well for Titan is the earning growth. The commentary coming in from the management saying that the earning growth will lag over revenue growth in FY24. Street hasn't taken that quite well and has punished the stock, probably recouping some of its losses out there, but nevertheless, slender losses seeing on Titan. Gujarat Gas sequentially below estimates, net profitability 42% down, revenue down by 4%, EBITDA has taken a hit by 31%, and the margins have shrunk to 10% as compared to 14.3%. Delta Corp and Nazara Technologies, another one that you need to keep on your list out there. Online gaming companies finally have seen some relief coming in. 28% GST will be reviewed now in the next 6 months after implementation of the GST Council. Though the decision has not been an unanimous one, but the formal vote was not required, as only a handful of members have voiced their dissent overall for this issue. Vedanta, probably a block deal which have already probably taken place, that needs to be watched out for. The promoters intended to sell around 16 crore shares, and this is going to be at a discount of 5% as compared to the current market price. Overall, the promoters have been looking to sell around 4.3% equity stake overall, and the company Bain Capital, another one which intended a sell-off to come in on that one, where it's lined up 7.9 crore shares in L&T Finance. That's another one for you. Chandan, comment on this one. Out of the results that we have, something like an HPCL and Delta Corp and Nazara Technologies. How are you finding the charts? What look attractive at this point of time?
Yeah, so talking about Delta Corp and Nazara, a couple of days back, these stocks were affected after the rise in GST to 28%. Overall structure is weak. However, it fell down, recovered. But I think overall weak structure is there. So as of now, the hurdle is near to 195 till it remains below 195. Stock can again drip to 180 level. If I talk about Nazara, also the weak structure is there. Hurdle is near to 700. Stock can drip down to a 665 kind of level. So weakness is likely to be there in both the stocks.
All right, Chandan, we are going to leave it at that. Thank you so much for taking out the time and speaking to us this morning. All right, it's that part of the show where we address in the fundamental side of the story. And of course, to take the discussion forward, we're being joined by Deven Choksey from DRchoksey. We're going to be taking the discussion forward with Deven out there. Good morning, Deven. How are you doing?
So much.
All right, so big news probably which has come out for the markets. Ambuja Cement deal which has finally come through with Sanghi, although on anticipated lines. We're seeing Ultratech Cement not doing too well after the recent announcement, and of course Ambuja also giving away to some amount of selling pressure. What's holding up is Sanghi. How do you view the space and what do you think about the deal?
So I would like to say that I think the cement in particular is having a good amount of traction and the visibility going forward as well, because India's economy is spending largely on the infrastructure building, and as a result of it, the demand of cement is always remaining high. The advantage of Ambuja, ACC combined, and at the same time now Sanghi into their fold, is basically twofold. One, on one side, they have got a mining, which is basically sitting right inside limestone mining territory. On the other side, Ambuja's ability to ship the cement using the port is extraordinarily important, because I think this is where probably I think they have been in a position to bring down the cost of transportation, which is a key factor for profitability as well. So from perspective of looking at this particular business, on one side you have the demand scenario which is appearing robust. On the other side, you have the ability to do the entire logistic management systematically, starting from procuring the raw material from the mine itself and getting them into the clinker for production of cement. And finally, I think using the energy source, which is alternate energy, which is fundamentally important, because typically I think Ambuja, SCC, particularly Ambuja, has been I think using the alternate source of rice husk and among others for firing their kilns. So as a result of it, their cost of power also would remain low. I think these are some of the natural advantages which comes to them, which is basically giving right kind of a perspective to a company like Sanghi, which is otherwise I think a standalone company. Now with the Ambuja SEC combined, I think if they get integrated well with a full country presence, I think due to the east-west connectivity of the port that Ambuja has through Adani's. In this kind of a situation, in my viewpoint, I think this should remain a promising venture which they acquired.
Sure. So how are you looking at the valuations of the deal? Do you find it's done at a discounted way, or you think it's pretty much at premium that we're looking at? Because the company has apparently said it's a 5,000 odd crore enterprise value deal. Overall, how are you looking at it?
So honestly speaking, I have not done the number calculation so far because of I think the announcement which is coming just now. But I believe that I think one will probably look into the numbers as the day progresses, and probably I think we'll come back with the valuation perspective.
All right. Let's talk about the other space that we have is perhaps the auto space. Most of the numbers have trickled in already. What are you making of the space? Any surprises out there for you, given the kind of valuation that these stocks are looking at right now?
Honestly, I think I'm more bullish on auto than ever before, frankly, because I think the opportunity on one side, particularly for commercial vehicles, is remaining extraordinarily high. infrastructure spending, industries, I think expansion, logistic management services in high demand, and also because of the faster connectivity of port along with the roads, is basically suggesting that the commercial vehicles would remain in high demand right now as well as going forward. Now, given that situation, along with the sweetener which has come now, is the scrappage policy. Due to the scrappage policy, the new vehicle demand, which is appearing to be on a higher side going forward, I believe that 2.5 lakh additional vehicles, I think, are new demand is getting generated. And that could possibly mean that the commercial vehicle in auto space, particularly, will have relatively a long-term visibility of 3 to 5 years from now onwards. The passenger vehicle portfolios of most of the companies, they are equally, I think, remaining interesting because of the higher amount of inflow of money, I think, in the hands of consumers for spending and availability of credit also at the same time, and that too not, I think, very expensive. So from that perspective, too, I think the passenger vehicle business remains clear. As far as the two-wheeler business is concerned within the auto space, I believe that the festive season would possibly propel higher demand, and particularly once the cropping season gets over post-monsoon. I believe that I think this is going to be generating higher demand for two-wheelers as well, along with the new roads. I think this is distinct possibility. So overall, auto space remains convincing, and along with auto ancillary looks, I think, even more interesting. I believe that I think both of them probably would have a cyclical upturn for next 3 to 5 years going forward.
Sure. Deven, I'd like to understand your view, a little more aerial perspective from you. Morgan Stanley has upgraded India today, so there is a bit of optimism there. But if you look at the cues for that matter, FIIs have been selling off for the last 5 consecutive sessions. You have Chinese equities which have been doing well, perhaps an opportunity play for the FIIs investors out there. Earnings season hasn't really sprung any surprises thus far. Do you think there is more steam to the rally for the markets, which otherwise seems to be subdued and in a consolidatory mode for the last couple of sessions out there?
So last month, they attracted, I think, about 75,000 crore plus from the FPI. Now, if that is the kind of a flow of money which came in last month alone, I believe that I think this is where probably the problem started, because the valuation moved up too quickly and too sharply as far as I think the expensiveness of the valuation is concerned, and which possibly demanded some amount of price correction. And this price correction, according to me, I think is frankly very, very healthy as I see it. In most of the price space, I think in the different businesses, I think that the correction in the price would probably invite larger amount of investment interest. We also have to be mindful of the fact that I think Indian domestic investor is putting in a lot of money, because he has seen success of this money, I think reward of this money, I think, coming to his portfolio, either through mutual fund or through the direct equity. So in my viewpoint, I think the correction in the price in last 4-5 days is largely due to some amount of profit taking. And at the same time, I think the valuation rationalization exercise which is currently happening. With the earnings season at the fag end of the quarter, I would think that portfolios would start getting readjusted going forward, and maybe you would see post-September rally into the market once again. So this 1.5 month period that we are likely to have currently is the period in which you will be seeing a lot of accumulation of select fundamental stocks in the portfolio of the investor. So I would remain positive. At the same time, I think look at the companies on a selective basis.
Sure, Deven. Let's also talk about online gaming companies out there, where the GST implementation is probably being put on hold for at least 6 months till the time the committee comes back and review the entire proposal out there, whether with regards to the 28% that should be imposed for these companies or no. We've seen some amount of drubbing for Delta Corp and Nazara, but the numbers have been more or less decent. How are you viewing these companies, and how do you view the development overall for these companies?
Well, I guess I think as a space, there is going to be a demand that the more amount of money comes in the hands of people. Definitely, I think you are going to see the surge in the activities in the gaming companies' businesses. Plus, I think online gaming business, including I think the sports business, is equally, I think, interesting space where people are spending significant amount of time and money at the same time. And at the same time, we are observing that I think it is becoming more of a professional activity for many of the professional players. And, so as a result of which, we see the activity continuing at a larger level. GST kind of a situation which has happened, I believe that I think it will possibly pass out in a period of time, as I see it. Maybe one will have to wait and see how exactly I think it will get over. But on the whole, I would remain positive about this particular space, though we don't have any particular coverage on the company. And neither we understand this subject, I think, in very deep, because I think we have not been putting this kind of money into this activity. But do believe from overall landscape that we have studied, do believe that there is enough amount of opportunity going forward for many of the players who are now into the market.
Sure, Deven. And I also want to understand overall your view for the entire earning upgrade that have come in thus far. Beg your pardon, the earning that have been reported thus far. Any surprises that have sprung up for you within this quarter? Any earnings that have managed to surprise you? Is there a theme which is probably a re-rating candidate, perhaps OMCs which have done well in Q1, almost better than what they've done in the entire FY23? What's your assessment?
I wouldn't call it surprises, but I guess I think it is more of a structural way of working as far as OMCs are concerned. See, I think if I took a little longer route to explain this part, the government, though, has made the petroleum prices free and mark to market. I think what they are doing is that during the time of election, I think they don't let the companies touch the prices. And as a result of it, those companies at times suffer, like happened last year. When the crude oil prices moved up, I think these companies were not allowed to raise the price of the petrol and diesel. As a result of it, they suffered in subsequent quarters. Today, the situation is reversed. The crude oil prices are under control, and the companies have not reduced the petrol and diesel prices. As a result of which, I think they are showing relatively higher amount of profits into the balance sheet. Once again, in this financial year, for now, I think we will have some 4-5 states getting into the election post-monsoon. I think once again, you are going to have the same situation that prices may be asked to be reduced, and thereafter they will not allowed to be changed. And then comes 2024 May election, same situation will happen. So honestly, I think in this kind of environment, it is very difficult for an investor to take a view on the businesses, which can possibly go either way based on the decision taken by somebody in the government to how to monitor it. We treat this as a commodity segment, and we feel that I think when the situation is right for trading, you should trade. If I think you find that I think ahead of election, if the stock prices have climbed up, and if there is enough amount of profit for you to make, might as well, I think, take that opportunity, book some profit and shift your money into some quality investment where your sustainability factor well established.
All right, Deven, we're just going to leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thank you.
All right, that was Deven with his views on a number of issues that we spoke about. Online gaming companies, talk about the cement deal which has come through, a host of couple of things playing out there, OMCs perhaps, autos. We discussed it all under the sky. But let's discuss a new kid on the block, SPFC IPO out there. It's a non-banking financial companies headquartered in Singapore and backed by Claremont Group, which is entering the primary markets through an IPO. The IPO consists of two components, a fresh issuance of equity shares valued at 600 crore and an offer for sale worth around 425 crore. The total value of the IPO stands around 1,025 odd crore. The company has established a price range of 54 to 57 per equity share, and it's worth noting that this marks the company's second endeavor to access the primary markets, with a further reduction in the size of the IPO. In March, SPFC Finance resubmitted its documents to SEBI and reduced the IPO size from 1600 crores to 1200 crores, which is further now reduced to 1025 odd crore. BRLM to the deal, while ICRA Securities, Axis Capital and Kotak Mahindra. These are some of the dates that we need to keep in mind, of course, for the IPO, which commences today, that is August 3rd, and concludes on August 7th. The listing date perhaps could be August 16th, but that's tentative for now. Notably, the allocation of shares to the anchor investors is slated, which has already done past yesterday, that is August 2nd. But to take the discussion forward, we're being joined by Khushbu Rai, analyst there from Moneycontrol Pro team, who's joining us with details out there. Khushbu, good morning. Your assessment for SPFC Finance, how are you looking at the business? MC Pro has a subscribe rating to it or an avoid rating to it. Do you see that more of a long-term play, or for that matter, do you just see that as an IPO which can just capture upon the listing gains? Your assessment, please.
Very good morning, Nickey. See, it's definitely very good IPO stock, and the most important reason for it is very attractively valued. And secondly, there's huge market opportunity, and this IPO has come at a time when the credit growth rate is very high, and the under penetration is also very high. So this could be a very good opportunity for this company to grow. The company loan book is growing at a very high rate. It's growing very rapidly for the past 3 years, over around 40%. And there's huge opportunity in the market. And the loan book size is very small. It's around 5,000 crore. So there's the investors can go for a long-term perspective also, and also can subscribe for listing gains. So this, because it's very attractive value right now.
Sure, Khushbu. The reason why I was asking this question was because of the kind of weaker profile that the company has as compared to that of the peers. If you talk about the ROEs, of that matter, the capital adequacy ratio, it seems to be a bit on the lower side as compared to a 5-star, or for that matter, ours. How are you looking at it? Except for the loan growth, of course, which has been faster due to the as compared to the peers, on also account of small base. Do you see these points as an area of concerns?
See, the most important strength this company is it's not regional, it's not region specific. They have a pan-India presence, and like around 17% of the share of the AUM is from a particular state, not more than that. So that and the company hasn't captured only, they have captured only 1/4 of the district in wherever their presence is. So there is huge growth in terms of customer acquisition. And given the pan-India presence they are encouraging the current acquisition strategy to be around that and not expanding in new geographies. And what differentiates this company is they have very strong infrastructure, collection infrastructure, and on-ground infrastructure is very strong as compared to other companies, I think. And gradually they will increase their leverage. And currently the OPEX is high at 5.7% because of the pan-India presence. So that operating leverage will be there going forward, which will help improve the ROE.
Sure. Also 5 key, or just if you could highlight for us 2-3 other fundamental factors which are working well for the company, would suppose the argument of probably a subscribe rating. What would those be?
See, there's a very strong management team. And apart from that, the promoters are very strong, which are backing the company, like Clermont, Artwood, and Malabar Group. These are very strong investors that are backing the company. And apart from that, the portfolio is basically concentrated around secured MSME lending. So the secured portfolio is high, the percentage is high. And although the market is overcrowded, but there is enough opportunity, like the current credit gap is around rupees 92 trillion. So you can imagine the kind of opportunity the company have to grow. So I think the growth rate will be there for the next couple of years. The company has guided for around 25 to 30% of the growth. And apart from that, the asset quality is improving. The past 3 years, the GNPA ratios and the credit cost both have declined. And apart from that, the profitability is also stable. The margins are high right now, but it will gradually stabilize and the operating cost will normalize.
Sure. Any areas of concern for you, Khushbu, out there?
The concentrated portfolio, as I mentioned earlier. Apart from that, it's highly competitive market. And there might be, some compression in terms of margins. And apart from that, they predominantly give loans to very small households, and which are especially in tier 2 and 3 areas. So these are economically vulnerable borrowers. So these can be some area of concern. So continuous monitoring of these kind of customers is very important.
All right, Khushbu, we're just going to leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thank you so much. Yeah.
All right, that was SPFC IPO. Promoter pedigree seems to be strong. Loan CAGR seems to be doing well. MC Pro at this point of time sees this as a long-term investment and not just an IPO, which can be capitalized for the listing gains. But that's all that we have for you at this point of time. With this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below and follow us on the link at the bottom of your screen. For rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.